All right, folks, this is one of my favorite lessons. We're doing real estate versus stock. Kind of want to show you the difference between the two, which one's a good investment. Look, I would never say that one's a great investment, one's a bad investment. They can both be good investments, but I want to kind of show you the difference between the two, and I'll show you kind of what some people that I respect have shown me about how real estate works. Okay, but where I took these numbers from. I took them from 1928 to 2013. That's the time period that I looked at. And the stock market over that period of time returned 9.5%, okay? There were some ups, there were some downs, you know, and there's lots of ups and downs in the stock market. So with the stock market, you get a lot of up and down and up and down and up and down. With the housing market, okay, over that same period of time, from 1928 to 2013, the housing market returned 3.7%. So a lot of people will look at those numbers and they'll say, oh, the stock market 9.5%, the housing market 3.7%, therefore stock is a better investment, right? I mean, based on just that pure number of the APR, you might think that. But let me just show you kind of how this works. So we use the rule of 72, and so if I use the rule of 72, I take the APR, and I'm rounding up here. I took that 9.5% and I rounded up to 10. 10 into 72 is 7.2 years. So every 7.2 years, your money will double, okay? So if we took 10% and started at the age of 20 with $5,000, every 7.2 years, your money's going to double. So at the age of 27.2, you're going to have $10,000. By the time you are 56 years old, you will have $160,000 in that account, okay? If it returns 10% over that period of time, okay? So the housing market, we said, okay, it's 3.7%. I rounded that up to 4, okay? 4 into 72, 18. So how often is your money going to double? Every 18 years. So if you're 20 years old and you have $5,000, well, that $5,000 18 years later would double to $10,000. 18 years later would double to $20,000. Okay? So, you know, you look at that and you say, okay, just based on that alone, okay, that looks like a better investment, right? Okay, but here's the key with real estate, okay? You take that $5,000 and you don't go just invest in a $5,000 piece of property. You take that $5,000, you use it as a down payment on a $200,000 piece of property, a house, okay? And you're going to have a mortgage payment on that house. So you've got $1,000 a month of a mortgage payment there, okay? So, well, that's, you know, how do you make up for that? Well, this is an investment, right? This is not the home you're living in, it's an investment. So you're going to rent that home out. And there's going to be some risk involved in investing in real estate. Don't get me wrong, okay? I'm not trying to say that stock is all risk and real estate is no risk. There's some risk involved in investing in real estate, okay? But if you can get a renter in there to rent that home and pay you $1,000 a month, their $1,000 of rent is covering that mortgage payment for you, okay? Now, this is some of the risk. You might get a renter in there that doesn't make their payments. You might get a renter in there that kind of damages the home or doesn't take care of the home, okay? And there's some things you can do to help prevent that. But, you know, there are some risk involved, so I don't want to appear as though I'm saying there's no risk involved. But if we have renters paying that mortgage payment every single month, okay, that $200,000 piece of property or that $100,000 home, that is what is growing now at 4%. So if I bought a $200,000 home, okay, over the next 36 years, when I'm 38, it will double to $400,000. When I'm 56, it will double to $800,000, okay? So now, 36 years later, you know, have I had some good renters and some bad renters? Was there some risk? Yes, there was some risk involved, okay? But, you know, I've got that mortgage paid off, okay? If I did a 30-year mortgage, I had that mortgage paid off when I was 50 years old, okay? Now, I owe zero on that home. And for the most part, those renters have been making the payments on that mortgage, okay? So now I sell the home and the value of that home is $800,000. So I made, on my $5,000, a $795,000 profit, didn't I? Okay? Whereas here, my 5,000 grew to 160,000, okay? So those are some thought. Now, one of the things, and this is just a story that I want to tell you, you know, I was a licensed financial planner. I would sit down with families. I made recommendations. I think the stock market is a good investment. I think it can be a good investment. And especially, and this is where it's a little bit hard, this is a good place to start in terms of investing, okay? We talked about index funds, and I think that's a great way to get started in the market, okay? But I've also said, hey, don't put all your eggs in one basket. Don't put all your eggs in the stock basket. And don't put all your eggs in the real estate basket. You want to be diversified, okay? But when I sat down with a guy who he created software, and the software he created was kind of teaching people how to trade stock. And I invited him in to be a guest speaker for an investment camp that I put on. And he was telling me about the software and and then like I do with all of the guest speakers that I have come in, I pushed him. I said, hey, where is your money? Where do you invest? Where's your money invested? Are you invested in stocks? You got a software that, you know, that tells people how to trade stock. Where's your money invested? And what he told me was really interesting. He said, probably 80% of my portfolio is invested in real estate. Now he had some housing, okay? He had some money invested in some homes that he was renting out to people, but he also had some money in commercial real estate where he was leasing to businesses to lease office space from him. And so, you know, I looked at that and I thought, you know, if a guy who's selling software to teach people how to trade stock, his personal portfolio is in real estate, there's something to that, okay? I think real estate can be a very good investment. So, quiz question, it's 2 questions, it's an opinion. You can put stock, you can put real estate, but I'm giving you a lot of reasons why one or the other. So, you know, look at that, tell me which one you think. It's an opinion, there's no right or wrong answers. Good luck to you on the quiz, okay? And remember, be safe and be rich.